Hello, I'm David Frazier, aka the Market Monk, and this is our Market Monk show where we strive to tell you everything that you need to know and nothing more concerning factors and developments that are likely to affect the value of your investment portfolio. So, if you've watched this show before, you know that we did not record any shows during the month of July. And the reason being is that we just weren't getting a lot of folks coming to our website and watching our Market Monk show. And it just became, quite honestly, very disappointing and somewhat discouraging. And the reason I say that, I mean, our goal here at Frazier and Mayer Research, LLC, which operates as themarketmonk.com, is truly to help individual investors and financial market speculators to avoid the big downturns in the financial markets and to profit from the upturns. And over the past 7 years, if we go back to when I was writing a financial market newsletter for a large publishing company here in the state of Florida, and then went out totally on my own in early 2012, we've done a very good job of doing just that. Now, we don't get everything right. All of our stock recommendations don't turn out making money, and we don't time getting in and out of the financial markets to the day or week on every occasion, and we don't expect to be able to do so. But overall, we've done a really good job at helping folks that listen to us and that subscribe to our financial newsletters to avoid the big downturns and to profit from the upturns. And an example is last Thursday when we sent out a trade alert during the middle of the trading day that I actually had contemplated very seriously doing the previous night on Wednesday of last week, and unfortunately I did not do that. In hindsight, I wish I had, but that doesn't really get us anywhere. But I did send out a trade alert during the middle of the trading day after stocks had fallen pretty sharply early that morning, but then rebounded during the afternoon, telling our subscribers to get almost completely out of the stock market. And I did that not because I was worried about the drop in stocks earlier that morning, or that I got scared and panicked. No, I didn't get scared and panicked. As I said, I'd contemplated very seriously sending out this trade alert to our subscribers the previous Wednesday evening. I told our subscribers to our newsletters to get mostly out of stocks, primarily because the research that I do on a regular basis had indicated strongly to me that the employment situation here in the United States had likely deteriorated somewhat during the month of July, and that there was and is a good chance that the employment situation here in the U.S. will deteriorate further during the months ahead. And if that turns out to be correct, and sure enough it did turn out to be correct for the month of July, as the U.S. Department of Labor reported last Friday that the employment market did weaken somewhat, that fewer jobs were created than during the prior month. If that continues to be the case, and my research indicates that it is going to continue to be the case, well, that means that household spending is likely going to continue to slow, that the construction of and sales of homes is going to deteriorate, that manufacturing activity will likely deteriorate. And therefore, if we do see a deterioration in the housing market and in the manufacturing market, and if we do see the rate of increases in household spending continue to slow, well, it's pretty obvious to me that if that does occur, that economic conditions overall are going to worsen during the months ahead, and that the pace of economic growth here in the United States is likely going to slow during the coming months. Now, those of you that are subscribers to our newsletters and that watch this show in April, May, and June of this year know that I had told investors going back a couple of months that my research was indicating just the opposite, that the employment market was going to continue to improve, that the housing market was going to continue to improve, that manufacturing activity was going to continue to increase, and that the pace of economic growth would likely increase during the second half of this year. But that's going back a couple months. Now you might say, well, that's only a couple months. What has changed? Well, sometimes things can change quite a bit during the course of just a couple of months. And I've done a lot of research, extensive research over the past few days, and what I'm seeing is that we are seeing a change. And I think a lot of this has to do with what appears to be a fact that the Federal Reserve has done everything that it can do to stimulate the economy by purchasing huge amounts of government securities in an effort to increase the amount of loanable funds that banks can lend to individuals, households, and businesses, and to keep lending rates really low. They've done everything that they can do, and they've had some success in stimulating the economy over the past few years. But they're out of weapons, in my opinion. There's just nothing else that they can do. Now, lending rates are likely going to continue to stay at low levels for probably, gosh, I don't know how long, for probably at least another 12 months. But even if lending rates remain at low levels, you can't force individuals, households, and businesses to go out and borrow and spend money. In just a moment, I'll show you that we have one particular statistic that shows quite clearly that even though lending rates have been very low and likely will continue to stay low for many months, that households, individuals, and businesses have not been taking out more loans and spending more money, but instead that we've seen just the opposite. And the reason being, without getting into a really long dissertation here, is that what we need to see are acts from Congress to stimulate the economy, such as lowering household and business tax rates would be very, very positive, such as getting rid of a lot of these ridiculous regulations that are, you know, if you're a small business owner, you know exactly what I'm talking about. The number of regulations is just insane. Unfortunately, are we going to see that? No, we're not going to see that, because we have very irresponsible people, for the most part. Of course, there are always exceptions in the Congress, that their actions clearly indicate to me that the only thing that they're really concerned about, I'm talking about most congresspersons, not everybody, but the most of these folks, their actions clearly indicate the only thing that they really care about is getting reelected so that they can keep their cushy country club-like job and get paid over $180,000 per year and have all types of benefits, whether it's vacation time, medical benefits, retirement benefits. You know, their actions clearly indicate that that's all they really care about for most of these folks. And the president, Mr. Barack Obama, if you're a supporter of him and you get angry at me and you don't watch our show anymore, or you don't subscribe to our newsletter, so be it. I'm going to say what appears to be very, very clear to me. This guy is either completely inept or just doesn't care about anything except keeping his cushy job for another couple of years. I mean, I don't even know where to begin. This guy, he's a joke. I would not hire that man to serve coffee. This guy is pitiful at doing anything to help this economy to improve. He's either completely inept or he just simply doesn't care. But enough about that. You know, I'm not doing this show today to complain. I'm doing this show to try to wake investors and financial market participants up and to look at what really matters and to realize what's really going on here. And what, as I said, even though I hadn't done this show for a couple months because we're just not getting a lot of viewers, after watching some TV shows this past weekend, yesterday and again today, that I tend to record on a fairly regular basis, not because I expect to get anything of actual value out of watching those shows, but because I record and watch certain financial market TV shows to get a good gauge on the perception of what investors and financial market participants in general are thinking from listening to the so-called experts that go on a lot of these shows. And I can tell you, right out, without any hesitation whatsoever, most of the folks that you see on these financial broadcast shows, and I'll just name the shows, such as, CNBC is a better example, it just is. You know, it's true to some extent on Fox Business News, but boy, in the past couple of years, I think Fox Business News actually puts out a lot of good information, at least compared to the more popular CNBC. So I'll just focus on CNBC. I don't mind naming names. I mean, the people that put on those shows appear to be much more knowledgeable than the so-called experts that they have on their shows, which is really a shame. But these experts, so-called experts that often come on these shows and that tell investors, well, they don't ever really tell you anything anyway. They always couch their statements. They never tell you what they actually expect if you listen to them carefully. But they either, most of them, once again, there are exceptions, but most of the folks that I ever listened to on those shows, they either don't know what they're talking about, that is, they're very bad at what they're doing, or they apparently have ulterior motives. And I'm going to give you some examples here, and once again, I'm trying to wake those of you that are watching this show up to realize that you can't listen to most of these people. They don't care about you. At least their actions suggest that they either don't care or they shouldn't be advising you what to do because they don't know what they're doing. So let's just give one example. Let me find this here, and then we'll get on to some other important things of what I think you should be doing. But I want to really try to wake you up as to why you shouldn't listen to these folks. So anyway, there was one particular person. I'm going to name names again. My business partner doesn't like me doing this, but I'm going to do it because I think you need to know who these folks are. So we had a chief U.S. economist at a firm by the name of IHS Global Insight. So these people, this firm, you know, based on their name, they have insight. IHS Global Insight. They have some great insight. And their chief U.S. economist, here's what he said last week after the gross domestic product report for the United States for the second quarter of this year was issued. He said that the second quarter rebound in real gross domestic product versus the prior quarter, the second quarter rebound, quote, provides evidence that the economy is healthy and will continue to grow at an above average rate in the second half of this year and into the year 2015. That, once again, the rebound during the second quarter, which is in the past, quote, provides evidence that the economy is healthy and will continue to grow at an above average rate in the second quarter. Well, this guy is just one of many examples of someone who either does not know what he's doing, is very bad at what he does, or is simply trying to mislead people. Because how in the world could something that's happened in the past provide evidence that the economy is healthy right now? So let's see. So if I was very, very healthy 3 months ago, does that mean that I'm healthy right now? Well, of course it doesn't. I mean, I could have been one of these persons overseas that just got this Ebola virus. Am I healthy today just because I was healthy a few months ago? That's complete nonsense. Just because the economy rebounded during the 3 months into June 30th does not mean that the economy is healthy today. But more importantly, it definitely, that rebound in economic activity during the 3 months into June 30th this year definitely does not provide any evidence whatsoever that the economy will continue to grow at an above average rate during the second half of this year. That doesn't make any sense. Just the fact that the economic growth improved during the 3 months into June 30th gives no indication whatsoever about how the economy is going to perform during the second half of this year. Provides no evidence, no information regarding how it's going to perform going forward. That's complete just asinine. That makes no sense. That is complete stupidity. And if this guy, this chief economist of that firm, happens to hear what I've said about his comments and he wants to debate me, come on, let's debate is what I have to say to him. I don't think he would want to do that because I'll either expose him for someone who doesn't know what he's talking about or is just simply trying to mislead people. Then, here are some other comments that I heard from listening to some of the so-called experts on these financial broadcast shows over the past few days. Two people, and I don't recall their names, or I'd tell you who they were, but brought on as supposed experts, said on a show that was recorded on Friday, I think it was, I don't know if it was Thursday or Friday, but that both of these people, here's what they said, I don't have their exact quotes, but they said, quote, I think that my review or my reading of the employment report that was out on Friday, they said essentially that they think, they both used the word think, that they think that the employment situation is improving. They think that the employment situation is improving based upon their review of the employment report that was issued last Friday. Well, first of all, the employment report that was issued last Friday was for job creation and or losses during the month of July, which is already in the past. I know it's only a few days in the past, but it's already in the past. So how in the world could that employment report tell you whether or not the employment situation is improving today on August 3rd, and then present terms, or that the employment situation was improving on the day that they said it, August 1st? Now you might say, well, it's just one day. You're being silly here, Mr. Frazier. I'm not being silly. This employment report was for the month of the month of July. It doesn't tell us anything about what's going on today. So how could it be that they think that that employment report indicates that the employment situation, quote, is improving? It's just complete nonsense. And I don't know, but it gets even worse than that, but because if we actually look at the employment report, two major employment reports, one from a private firm, ADP, that is automatic data processing, that does payroll functions for thousands of companies in the United States. Well, ADP told us last Wednesday that their survey of the employment situation here in the United States during the month of July showed that in the in the private sector of the economy, that is excluding government jobs, that overall that 62,000 fewer jobs were created during the month of July than during the month of June. Well, not only does that mean that we don't know anything about whether the employment situation is improving, but apparently these people who said that they think, these experts who said that they think that the employment report was a good one and the employment situation is improving, apparently they can't even do first grade arithmetic, because 62,000 fewer jobs were created during the private sector during July than during June. So obviously the employment situation did not improve during July, it worsened. And a report, or the report this past Friday from the U.S. Department of Labor shows similar results. And that is, including government jobs, the U.S. Department of Labor announced on Friday that on a seasonally adjusted, annualized basis, not the actual number of jobs that are created, but if we account for seasonal effects and then annualize the figures, that 89,000 fewer jobs were created during the month of July than during the month of June. So I don't know, these two experts that they had on TV, unless they knew exactly what was going on August 1st in the employment market, I don't know what in the world led them to think that the employment situation is improving. Because we have statistics from automatic data processing and the U.S. Department of Labor that shows clearly that the employment situation worsened, not terribly, but that it did worsen somewhat during the month of July versus the previous month. Complete nonsense. Makes no sense whatsoever. Let's see, where would we go from here? Let's now take a look at some GDP statistics, the gross domestic product for the second quarter of this year. Because I also heard when I was watching these experts, so-called experts, speak on these financial broadcast shows, say how, what was one phrase that was said? One phrase I heard, the person said that the economy is improving during the second quarter. Well, think about that. Does this person just not, even though, you'd think they're on national TV and they've got these high-level degrees from prestigious schools, either they just don't understand basic language, they don't understand how to speak correctly, or once again, they're purposely misleading people. Because how is it that the economy is improving during the 3 months into June? The 3 months into June is in the past. So how is that is improving? Now, it's true that the economy did improve during the 3 months into June 30th, but that doesn't mean it is continuing to improve. That's already over. And this person went on to say how that because of that big improvement during the 3 months into June, that that the economy was going to continue to improve during the months ahead. Well, if we take a look at that GDP report closely, which I did and do during every quarter of the year, what we find is that by far, the biggest contributor to the increase in the gross domestic product for the second quarter of this year came from increases in inventories at manufacturing companies and businesses that stock and sell goods, products, not services, products that sell goods. That manufacturing companies and business enterprises that sell products, they increase their inventories substantially. That was by far the largest contributor to the increase in GDP during the second quarter. And why am I making an issue of that? I'm making an issue of that for this reason. Let's go to a chart. I don't know if I'm able to show you this, so please forgive me. I have to think just a moment. This is going to be a lot of comments that I have to make here. Let me find this. Please forgive me. Yeah, I can do this. I don't know if I want to get into this, though, because we just don't have the time. It's going to take a lot of time, and I don't want this to be too long a video. So, I'm just trying to think whether I get into all of this. I think it would just get way too long if I do this. Here's what I'm going to do. I think what I'll do is this coming Monday, that is tomorrow evening, on August 4th, I'll do another video for our MarketMonk show, and I'll capture a lot of charts of very reliable leading economic indicators that show just the opposite of what a lot of these so-called experts that I listened to the past couple of days said regarding the direction of the U.S. economy over the next several months. I think I'll do that tomorrow evening on August 4th. So I encourage you to come back and watch our show on Monday, August 4th. I'll show charts of several leading economic indicators that have been very reliable over the past 50 years and indicating where the economy is likely headed over a period of approximately 3 to 12 months into the future. And what you're going to see when I show you those charts is that just the opposite is those leading indicators suggest that just the opposite is going to happen in regard to what these so-called experts that I listened to said, and that is that we're probably going to see the employment situation worsen further, that the overall economy is going to worsen somewhat. I don't see any indication of going into a deep recession, but that the economy is going to worsen and that the pace of economic growth is likely going to slow considerably over the next 3 to 6 months. And if I end up being correct on that, based on what I'm getting out of the readings on these leading indicators, well, that stock prices in general are going to continue to move lower over the next couple of weeks. And I don't think we're going to have a huge drop in stocks, but I do think we're going to see stocks in general continue to move lower, and then we're probably going to get into an environment, because the readings on these indicators that I review on a regular basis do not suggest we're going to go into any type of deep recession, or really not a recession at all, but that we're just going to continue to grow here in the United States at a very sluggish pace, or not continue to grow, because we did have, well, it wasn't even a big increase during the second quarter, really. These folks, what they do is they take one quarter versus the last quarter, the change, and then multiply it times 4 for the so-called growth rate. And that's just complete nonsense, too. Why would you do that? To take something that happened in the past and then extrapolate it into the future, multiply it times 4. That doesn't make any sense. If we look at actual GDP on a year-over-year basis, I think it was up 2.5% during the second quarter, only 2.5, not 4%, up only 2.5% versus the same quarter a year ago. And that's not terribly sluggish growth, but it's not fast growth. So I feel like I'm going on and on and on. So I'm going to stop talking here. I'm just saying what I'm going to do is tomorrow evening on Monday, August 4th, I'm going to review numerous charts of leading economic indicators. that will show you clearly that these indicators suggest we're going to see a slowdown in the pace of economic growth, and the stock prices are going to move sideways at best over the next several months. And that's not a big negative necessarily. And in fact, if we do have sideways volatility, I think we'll finally be in a period, if that occurs, that we can do a lot of short-term trading without having a lot of risk, and can probably capture a lot of gains, some good gains in very short periods of time. So I'm going to wrap it up there and just end by saying you can't listen to most of these folks. They're not here to help you. If you listen to me regularly and or subscribe to one of our newsletters, you'll see that I really am trying to help financial market participants. Yes, I'd like to make some money for myself, and we all need to get paid. I spend a lot of time doing a lot of research, but I really am trying to help financial market participants to avoid the big downturns and to profit from the upturns. Okay, that's enough. This is very, very long. I'm going to stop it there. Thank you for listening. I'll speak with you on Monday evening.